All right, so today we got the short setup. So starting the daily chart, obviously at all-time highs, and pretty clear buy-side delivery buy program. So I was looking at these relative equal highs up here. We have a daily ERL to IRL movement. So look at these relative equal highs. That's your buy-side liquidity, and then you have a bisi, not in discount, but just a IRL target within here. So this is your daily structure, and this is why you'd be favoring after the run on buy side during London session. Then we move into the IRL. So if you go to the 4-hour chart, you actually can refine this bisi down into this area here. So you want to extend that out as your refined area. But notice how this gap was respected once, twice. So you can expect it to be respected a second time or third time after you've already seen price hold that level. So aiming for the daily imbalance, but the 4 imbalance worked nice. We also have a PM session low on, go to the 1-hour chart. This low, I think. Nope. 4 p.m. I believe it was this low. Yeah. So you have sell-side liquidity form of ERL here, which is your PM session low from Tuesday, right before the bank holiday. You can see all of the bank holiday also generating low resistance liquidity in the form of sell side. You have Asian low and London low here, below market, and then the high being put in right at 3 a.m. So you see a classic expansion day into the target. So if we're bearish, obviously you're looking for an open, high, low close within our kill zone between 9:30 and 11 o'clock. And if you look on the economic calendar, we also had 8:30 news. So you can want to find an entry between 9:30 and 10 o'clock, preferably within the macro time. So I'll go over the 15. I want you to notice something. We have obviously the market maker sell model and the low resistance liquidity on the left side of the chart here, but we do have a premium imbalance over here and one over here, which is the one I'm actually watching. So notice how we have this imbalance up here and price fails to even reach up into premium of the dealing range. It just trades up, fills a 5-minute gap probably in there. Same thing over here, and then it wilts lower. It can't even retrace into premium, which tells you that it's weak. It's likely to expand quickly, and you're not going to have a clean Judas swing to the upside if we're this weak. So this is the stronger asset, sorry, the weaker asset compared to the 3 indices. Go over to the 5-minute, same thing in here. You can see the inefficiency failing to get up into there, inefficiency failing to get up into there. So we're inherently more weak. Now, for the ATM model, obviously with the open, high, low, close, first 15 minutes, we want to see print. So between here and 9:30, we need to see some sort of bearish SMT. So is there any bearish SMT between the indices? Well, you go up on ES. If you look at the 850 high, ES sweeps it right at 945. That's your turtle soup. And then if you go back to NASDAQ, obviously creating the lower low of the two, and then you have your bearish SMT here. All right, so now you're waiting for a 5-minute candle to print lower. So if you go back to the 1-minute chart, point out a couple things. First of all, we do have this sibi, and you could probably, if you weren't looking for the daily imbalance or just a higher time frame narrative, you may see this as a bullish breaker. This is not a bullish breaker. You don't have a clear low that creates the low, high, lower low. This is just a order block. But don't look at this as an expansion away from the Judas swing. Look at this as the true Judas swing. So this is a day where you kind of have two Judas swings, and that's why with the ATM model, you want to wait till 9:45 because normally the first 15 minutes you'll have either one Judas swing that's clear and we're displacing away, or you get two Judas swings like this. And you don't want to get faked out by this move by entering too early. Anyways, clear SMT. Now you're waiting for a 5-minute candle to print bearishly after 9:45. Well, you do have a 9:45 bearish candle in the 5-minute printing here. Does it create a 1-minute sibi? It does not. Right up into 950, right? Then you go to the 5-minute candle on 950. It prints bearishly and displaces. Now on the 5-minute, you do also want to see order flow go in your favor. So if we're want to see a CISD or something like that, there needs to be either a fair value gap we're trading through, or an order block we're trading through that indicates that price is willing to expand towards our draw. So in this case, you do have a bisi and it closes right at the discount end, which it's not a full inversion yet. Only here you get the inversion, but it's still indicating that we're weak on the 5-minute chart, right? So then I go back to the 1. Sorry if I'm cycling time frames too much. And that 5-minute candle that displaced does create inefficiencies in the form of sibis that you want to use to go short, right? If we're going short, we want to only use sibis. If we're long, only using bisis. So since we have no breaker that's clear, what can you be using? Well, dealing range premium would be preferred. So if you look right in here, we have our premium inefficiency, right? And price does reach all the way. If I shift this over, it is 1 tick the premium, I think, right up in there if you can see it. So 1 ticks the premium, fills the gap right at 956 within macro time. And then obviously you have short-term liquidity pools here, which would be a sell side liquidity. You could take partial on, good little 47 points, which is more than enough. Then you have the ERL, the PM session low, the 4-hour imbalance, which is this gray shaded box, and then the daily imbalance, which is this lower gray shaded box. And then obviously as we displace away, you want to see order blocks hold. So we fill the gap. We have a up closing candle here, and then it trades away from that. So as we confirm this as a bearish order block, that's where I went in on demo and went short as soon as we got a reaction off the order block, and then taking partial right on that ERL right there, about a tick below the ERL, which is, I don't know how many points that is. About 65-ish points, week's worth within a day. So you don't obviously have to trade every single day. Yesterday with a bank holiday, Tuesday, Monday weren't the best, but they're still decent moves within the range. But I do want to notice, I'm going to show you something. We do have, if you're looking at this sell liquidity sweep, and then you want to look for the low resistance liquidity up here, which was quite obvious in the morning. You may get tripped up by the fact that we had London high up here and all this low resistance buy side. There was no clear SMT on the lows, right? If you look at the lows here, 930, is there any SMT? Well, we have this pierced, and this is also pierced over here. Same thing with YM. So there isn't any clear bullish SMT, and I'm really looking between the 930, the first 15 minutes, the 3 15-minute candles between 915, 930, 945. Is there SMT between those lows? Well, we don't have anything in here, right? There's no low SMT, but we do have high SMT, which is a little scary in the beginning because the YM candle be printing and it looks like it just wants to continue all the way up. And sometimes you don't want to be looking at YM. That's like a last case for SMT. Preferably you want to be using these two, ES and NASDAQ, and then maybe DXY can be grouped up in there too. But YM a lot of times will give not false signals, but it looks a little bit different compared to the true SMT between ES and NASDAQ. So obviously we wanted to see continued expansion into maybe 1110 or even to lunch, but this 1020 low obviously digging into a daily imbalance, so it may take a while for us to re-pierce that low, and it doesn't need to reach back into it. You can see the order flow is now changing to a bullish state as we reach back into premium. But solid model. Make sure you screenshot this and make sure to look at the entry times and exit times as normal. Like you look at this exit right at macro close, 11, 10, 12, 2 minutes off macro close. And these entries, if you go back and study between 9:53 and 9:57, actually between 9:52 and 9:59, there's a lot of times a little window within the macro time you can find an entry within there. So 9:54, 9:55, 56, 57, 58. Within that range, if we're tapping for value gap, you have to look at that order flow. A lot of times that's going to be your preferred entry. If you go back and look at your screenshots, within that first 10 minutes, you're going to find a good entry, and you can narrow it down to 952 to 959. But yeah, nothing crazy. Be back streaming next week, Lord willing, on Monday or Tuesday, depending on the news. Take care the rest of the week, and I'll talk soon. Peace.